Well, all right, everyone. That was a great week. I'm going to give you a recap on what we saw and what we could look forward to. And I'll even share some of my performance gains that we had along the way, some of the plays that I made. And for anybody over at the Discord, you got to see those, one of which was a 94% intraday play, and that was absolutely awesome. I'll share that one and more in this video with the best penny stocks to buy now and give an update on my top 5 underdog picks, which have been marching up steadily with the markets, and we'll see if they have signs of promise that they could keep on going from where they're at right now. So here's SPY. There we go. By the way, I do have a special treat, and I also have, I got to show you this. I have a sticker, had it on my shirt all day for work, and kind of forgot that it was there. My toddler gave it to me. So that ties in with that special treat at the end of the video there. So for SPY, there we go. Take a look at that. Popped up a new all-time high for that. And then retrace down, probably some profit taken going into the weekend. Plus, there's a lot of uncertainty that goes along with it. And I got to tell you, that's why I went and bird in hand with some of the things. I was like, should I let it ride? Should I go ahead and take it? And I'll talk about those plays. So for SPY, new all-time high, great. And I talked about September to remember, and that's exactly what we got, up about 3.5%. Pretty darn good for a month when the 9% is the average annual return of the S&P. So let's go from there over to the Qs. So QQQ, tracking the NASDAQ 100 on a monthly basis. This one took 5.38% in September. Once again, September, remember, check. We wouldn't say it was the most astounding month ever, but again, 5% is incredible. I would take that every month, all month long. That's all I would do is dump all my money into the Qs all the time and take the guarantee if that was going to be the case. Now, the big thing that hit, and I've been talking about this for literal months, was the inverse head and shoulders pattern on IWM. And today, within 1 cent of that price target of the inverse head and shoulders pattern, we landed. So 248.08 is what I had. And when we go to IWM, where did we peak out today before retracing slightly? By the way, the September performance, 3.18% for the small caps, excellent. And that was following a 7% August. So drop down to the weekly chart now so that I can show you the inverse head and shoulders for this. And let's unhide the technicals. So right here is that inverse head and shoulders that you see along with these 2 dotted lines for the neckline. There's the marked distance from all the way from that trough all the way up to the bottom of this neckline. And then you also see that continuation, that transfer up to here, which set that price target at 248.08. And you can go back to my old videos and check it out. Haven't moved it. There it is, 248.08. Where did we peak out today? And even though you can see the kind of candle that we got, and it doesn't look too good for a long, we'll get to those technicals in a moment. That peak that we got on that 248.09. So within 1 penny, we nailed that price target. So round of applause for yourselves if you followed along. And if you didn't follow along, I'm going to tell you the technicals, they just stay tight around here. So even though not every play works out, at least you can still see that the supports and resistances are reliable for finding where you could make those trades. So here's one of the troublesome things on IWM is this rising wedge pattern that we have. We broke out of it, and today was a retest, and we got rejected. That doesn't necessarily bode well for the tracking of the small caps, if you will. Now, it does not mean that we're necessarily going to tumble and everything's going to fall apart from here, but it is something to keep your eye on. We're currently gapped up above the 5 EMA. We're above the 13, above the 50, above the 200, and we have a 66, almost 67 RSI on the daily chart. We are just so solidly in bullish territory for that. That doesn't mean we stay there, but we don't have evidence that it's time to go short on any of the indices right now. Maybe that wait and see. And like I said, I went bird in hand because of a lot of the uncertainty that we have. And I was also using some very short-term and aggressive options with some of the plays that I did. So for IWM, finally get to report that price target as being hit. And the neckline, we had to go all the way back to the beginning of June to really talk about this inverse head and shoulders. Maybe even I started talking about it in May. I'd have to go and see exactly when that was. So May, it was either late May, early June when I started seeing it shape up. So this is very bullish, broke the neckline, returned to it one more time, and then took that rocket ship ride off of this thing. So perfect. So BTC, there we go. For Bitcoin against the US dollar, there we go. Pay attention to this red area that's up here. I said that this was that contentious area. And what we're seeing right now is that contention happening along with what could be considered to be a triple top. You can see the selling pressure we got on the 14th of July. 13th of August was great. 14th of August ripped us back down and sold us back off. Then we got this double bottom. broke the neckline of that, and then we had that nice little rise up. I said that we have to sit on top of 125,000 per BTC in order to see this thing keep on running further. I still stand by that. Now, I did use IBIT, which is a Bitcoin ETF, in order to capture that 94% intraday. Found myself a nice little entry, wrote it on the way up, cashed out. I did, by the way, set it as a stop. So that was something that I could have taken a little bit more. I think it was up to about 108%. So if I would have just sold it outright, would have captured a few more percent. But I also wanted to give it some room just in case Bitcoin was going to go ahead and rise up a little bit more from where we were at, and then took that profit. And then I actually took another options play on that one, took a 24%. Although that one I wasn't able, I got interrupted, wasn't able to put it over at the Discord. The 94% was absolutely posted over there. And then I also rolled those profits into another option. This one I'm going to let ride for the weekend. If Bitcoin goes through and puts up that rising and take 125,000, it can also take that rise up pretty quickly to 130,000. And if it does do that, I should have myself a 300% winner on my hands, and also shared over at the Discord as well. Pretty darn excited about that. So IBIT was that ETF that I used, and I can put the chart up here. It doesn't really change a lot for my interpretation because IBIT is derivative of Bitcoin. It is not Bitcoin itself. So you can see the similar shape that Bitcoin had when we look here, and this has a deep enough options market is able to take advantage of it. And you can see that the volumes were pretty darn good too here today. And even though it is an ETF, not Bitcoin itself, that we had some relatively high trading volumes. And so that is perfect. And I think that we could potentially see crypto continue to rise from where it's at right now, especially if it's against a weakening dollar. Then that Bitcoin and crypto itself should be able to trade pretty well against it. That's what I got my fingers crossed on, especially in light of the government shutdown. So we'll put that back up there for you. bigbear.ai has a nice little bottle rocket look here, finding support off the 5 EMA. So for a BBAI stock, this one, yeah, we were able to put in over that peak. We really got to try and get back up here. I said the number we have to sit on top of, I'll show it on here for you. I said we have to sit on top of 735. We got rejected at 736, rejected at 736. Today we squeaked up to 737, and that's as high as we made it before retracing back down. We pushed way down on this thing, all the way down to, it looks like 690, and then closed back up above that $7. So there's still some very much bullish appetite going for bigbear.ai. It's still above all the moving averages that I would look for in order to see continued bullishness. That's good. The RSI, as a matter of fact, on this also happens to be pretty darn good as well. Trading volumes are even holding out. We are seeing a decline. If this is that peak that we get and we confirm with a lower value on the RSI towards 50, then we can say that this thing is in a true decline, that we no longer have that rise in momentum on a daily basis for bigbear.ai. On a weekly, we're sitting at 59. On a monthly, we're sitting at 62. This thing is perfectly positioned, but you can see, let me drop these back down. On a monthly chart, you can see just how much selling pressure comes in here. We want to hear news of those defense contracts rolling in if bigbear.ai is going to get them. And we do still continue to see, actually it looks a lot like Beam, BEEM. It's a penny stock that I've been tracking for a while now. I want to see it close above 308. Maybe we'll take a look at that in just a moment. But you can see the top's coming down, the bottom's coming up. This thing's going to squeeze on us and push one way or another. It could push to the top, it could push to the bottom. We got to watch and see. Fingers crossed that it pushes to the top. I no longer have any position right now in bigbear.ai. My last 100 shares that I sold the call option against took those away from me, and I forget what I closed my cost basis out at. But I made my profit during the volatility, during the rise, and then also during some of the decline as well throughout their earnings. And we'll say that it was trades well done. So now it's a matter of just hang on, waiting for that next opportunity to happen. It happens north of 735 if we can hold it. Otherwise, we are looking for this thing. Let's drop back down the daily chart so I can tell you what happens if we end up getting down below this resistance. There's not really a real trade here for me in terms of a short unless we start to see the 5 crossing down into the 13. But really, I would like to see something even bigger, like that breakdown below the 50 or something like this. If I was going to trade this with the overnight risk, with weekend risks, and I just don't think we have evidence that short is the way to go, and we're just too far close to resistance right now that long is the way to go with any sort of options play. So wanted to put that out there for you. NVTS was an interesting one today. Man, it was a rocket ship. It opened way up here, up above the previous high point. So we had a high yesterday of 844. We opened today at 847. So 3 cents higher, poked up to 849. Just could not hold it. Found support at the 5 EMA, which is a good thing. And we just need to watch and see for that next major opportunity to come our way. Now, mind you, there is a shelf right here at about 755. You can see it when you look back at the 13th of August. And when you also look at the 29th of September, and that's what we pulled back to, probably even more importantly than the 5 EMA, is that shelf right across there. If I put the technicals back up there for you, you can even see that that lands. I better change this over to green so we can see it as support now rather than resistance. There we go. Since we broke up above it yesterday, we held on to it today. That is firmly support for us. And it looks like the major resistance happens to be up here where these 786s are. I was hoping we could melt through them. Just didn't have it in us today. With the weekend coming, most likely we got some profit taking happening as well. But you can see that resistance. When that resistance gets overtaken, if it's in this run, we should see that push to $9 happening pretty darn easily. In the meantime, it's important that we get back up over 794. RZLV had a nice day today. Nice little gap up move from the open, but that's not so great to see something like that, especially, here's the warning shot for you guys. Let me grab the brush tool here. If we see the candle over, that is supposed to be a red candle there. We'll change it to red, not much of a candle. There we go. That's the way it was. Oh, that looks worse. I don't know what that is. The letter P, I guess, for producing, printing. I don't know. You guys let me know what you think that is. So for that one, if we see a candle gapping back down this way, that is a bearish sign, highly bearish sign to abandon this candle that's up here and say that the bears really have taken control of this thing. And so despite all the bullishness that we have on this, that's something to be very wary of and very cautious of. So if we put up the technicals on this, for RZLV, and I have a lot that's not shown here. There we go. We'll show a lot of that stuff for you. There we go. Some horizontal lines. Perfect. You can see that we are still above the 671 that I talked about, which is good. Opening below 664, not that great for us. Then we got to watch out for what's down below, especially if we get back under these moving averages, the 5 and the 13. We could really push further south of that with a candle formation like this one. So just be careful when you see that sort of selling pressure. It's great that we put in a new high, but we didn't hold it. And so that gives kind of a mixed sentiment on that one. So guys, I'm going to get into the underdog stocks, the top 5 underdog stocks. And Nike was number 1 on the list. And as a matter of fact, it's still going to keep its seat there. And we'll talk about that. Chipotle was my big play for the day. I think I took 22 or 23% home on that intraday options trade as well. I originally was going to hold it through the weekend, but I'll show you what changed my mind, what made me think, you know what, I don't think the weekend risk is worth it on this one, even though we had a significant amount of days. I think I went with November 21st expiration on it. So let's put this up here. We'll get to Chipotle in a moment. First, let's kick things off with the first underdog, the trade desk. Talked about this on Sunday, so Friday's close of last week was the thing to look at. So we were all the way down at a close of 47, closed today up at 51. Which, take a look just to the left, that puts us right up against that resistance. For me, this was not the time to go long. I looked at this one. I was like, well, if I needed that options play, it would have been Monday. I missed it on Monday. I didn't want to chase it. I missed my next opportunity, which is this retest back here on Wednesday. And once again, didn't want to chase it. Although anytime Wednesday probably would have been great, but the best entry would have been when we're still down below the 5, but up above the 13, because that was that retest. Found support, and we still moved up significantly, another $2 on top of that. And with options, you can actually get some fairly good outsized gains, or that you have a large amount of shares could also produce some nice cash for you as well. Now for Chipotle, this is different because I was on time for this one, so I was able to share this one over at the Discord with the transaction. I caught this thing when the price was just above these candles, and I talked about it in my morning video. Seeing a break above those could be a very good thing, and look at that big old pickle that we got on this thing. Or maybe it's a green pepper. Nah, let's not muddy the waters here. Look at that pickle that we got on the chart here for Chipotle. As soon as we broke up above that, this thing put on to the peak of this thing almost $1.50, a little over, maybe $1.75. So this thing peaked at 41.96 before retracing. I said about the trouble near 42. Look at the technicals on this thing. So I could have held this thing over the weekend, which would have meant for an options play, I would have eaten the theta decay on it, and that means losing that time value on the option, which, by the way, I run options workshops. I got another one coming out, a level 2 workshop where I talk more about the selling to open side of options. But in the meantime, I do have those workshops. I will let you know officially when the next one comes out. and when the next beginner workshop comes out as well. So putting this chart back up here for you, I didn't want that time value to go. Plus, we were so darn close to that 50 EMA, just a few cents away from it. I was like, I don't want to get up here and then get rejected and miss the top of this thing. So I went bird in hand, which means that I just took the profits going into the weekend and just saved myself that sweat and that risk. Especially look at the big fat resistance that we have to the north of this thing. There's just an enormous amount from 42 up to about 50, and then up above that is where we have that 52. Now, mind you, the thing that I'm excited about for this is that if we can get up on top of this 50 EMA, we can ride this thing up to about 47, and I hope I don't miss it. That's the thing, is that I really hope that I get the opportunity to see a rejection off the 50, a tag on the 13, and then that next push up. The volume, by the way, was actually pretty decent today. Not explosive, but above average, and that could be good enough, at least initially. Getting on top of that 50 could be more. The RSI also popped up above 50. All the signs that I'd be looking for in an underdog stock with a profitable and very solid company like Chipotle Mexican Grill was one of the safer plays that was out there. Not necessarily like one of the penny stock plays, for example, but it did seem to be time that we were starting to see signs of accumulation coming back in, and the fastest moving averages in RSI were suggesting that, hey, that time is coming soon, and today that timing really worked out. So for anybody over at the Discord who followed me on that one also worked out very well. Under Armour, let's get to that next one. I'll pop that up. There we go. Moving over to Under Armour, not showing me volumes that I really care about yet. RSI kind of dodging sideways of 50. It went from yesterday at 49.33 to today 49.33. Absolutely flat right along 50, just south of it for the momentum. So still technically bearish as per the RSI, and the moving averages up to the north, well below the 200-day, well below the 50. Yeah, we're seeing some small signs of accumulation here, but those candles, look back to Chipotle real quick. Look at these candles that we got from yesterday on October the 2nd. And then look what we got today, October the 3rd on this one. That's the shape that I'm looking for. Look at the indecision that we got before. That's not the kind of stuff that I wanted to jump into with options. When we move over to Under Armour, there's the indecision. Yeah, we got that build up above the moving averages. The RSI is not there. The volume's not there. I just don't think that Under Armour's ready yet, but I do still think that it could be ready soon. I'm going to actually bump this one down a little bit. We're going to send it back to number 5 slot. Let me check Trade Desk. Yeah, I think that's still good in position. There we go. Let's go to number 2 slot here for CROX. This one also didn't catch, but I talked about on Sunday. So Friday's close that we got was 81.73. Where did it tag today? Tagged all the way up at 86. So we had that $5 move, which is about a 6% move. And again, with options, absolutely incredible. So we had a move on volume. So there's the volume candle there. Up above the 5 and the 13. We got the cross on Monday. So if I was able to time it on Monday, not always able to time these things, can't always be present in the markets, and that's a limitation, a struggle that I got to face. As a matter of fact, all of us got to keep that in mind, because we can, especially when options are involved, if your stops aren't set right, if your timing's not set right, if you can't actively track all the time, sometimes it can really change the way that you should go about things, and it can also mitigate your results, and sometimes it can even bring in loss where you should have made profit. But if you were able to benefit from this CROX call that I had here, talking about as one of my number 2 slot for my underdogs, then that should have been a very, very good week for you on that one. Giving back a little bit today, down about 1.52%, still closing almost at 85. So we got 84.89. So Nike, here's the thing that keeps it number 1 spot for Nike. Now, mind you, we have to have this thing hold out. So we got that move up, lots of buying pressure, keeping that long bottom wick on this, even though it's a red candle, and that was on Wednesday. So talked about it as an underdog on Friday, and on Friday, that closing price that we had was $69.31. This thing peaked all the way up at $77 pretty much, so $76.97, and so that was just a huge move that we had for that. So about an $8 move, so that's well over 10% to the peak, and then still settling back right around just south of $72. So even if it was from the close that we had on Friday until we got that close on this Friday, that's still a solid move that we had. So we went from 69.31 to a close about 72, and so we'll take that as well. That's still about a $3 move, just shy of $3 that we're getting there. So about a 5% move. With lots of opportunity that could have been capitalized in between. Now, the thing that keeps me excited about this is we are still above the 200. This could be a retest that we're watching for. So the thing to watch for on Monday of next week is whether or not we find that support at 71.76 or at this 200 day, because it's a moving average, so it's going to move a little bit with that updated closing value, if you will, on Monday when it takes place. If that holds as support, that can be huge for us because that can help put us back in bullish territory. Now, some other mitigating factors with this being an underdog, something we have to watch for is the moving averages. We don't have the perfect structure yet. We want to get the 5 and the 13 up above the 50 as well. Those crossovers can be absolutely enormous and actually give us the most bullish structure that we're looking for, which is where the 5 is above the 13, above the 50, above the 200. So that's what we want, and we just don't have that. We had the bearish crossovers back here, and the thing sold way down. Now we're looking for the opposite. We want the bullish crossovers so this thing can trade way up, and we know that its potential is at least about $5 north of right now. So that gives us a little bit of a gauge for that move in order to take place. As a matter of fact, that gave us that tiny gap fill that we were looking at back on the 29th of August, the last time that this thing sold down. So we have a fair amount of room to the north for Nike. And like I said, we could be seeing that prime location for another entry. I would like to see what Monday brings for us, especially with the overall market bias in the background. So guys, if you want to join me and the other panel experts over at the Discord, the link's in the description. Code word doctor when you sign up. It's going to save you 50% off your first month sign up. You can see the list of winners from throughout the day. You can see all my transactions in the expert channel that's over there, my personal channel that's in there, and then the other experts have their own channels where they post their transactions as well. You can interact with the other 1,000 community members that are already part of the entire ecosystem that's there to support you in your journey towards financial freedom and building alpha in your portfolio. And if you want to continue to support yourself while supporting this channel, there's some coursework through Stockmo Academy. Code word doctor gets you $400 off those courses when you sign up, off each one of them. If you bundle them together, it's a bit cheaper. Plus, you get a bundle discount on top of it. Plus, code word doctor still works for that bundle. So that's where you're going to get that maximum savings. Guys, thank you very much for watching. I'm going to let my toddler daughter tell you who I am.
Dr. Stock.
There you go, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.